A very good afternoon, guys. Continuing with the next chapter, that is non-banking financial companies. We call it as NBFC. One of the shortest of the chapter of your syllabus, should not be taking more than 3 lectures. 3 lectures when I say maximum 5 to 6 recordings. Okay. One of the shortest of the chapter of your entire syllabus, not only of FS6, but you can say it comes in the top 2 or 3 shortest chapter of your entire syllabus of all the subjects together. Now listen, when I say NBFC, non-banking financial companies, you all have done accounting for banking companies. In that we have done small sums as well as final accounts of banking companies. Now this is similar to that, but a very short version of that chapter. Now first, understand what is the difference between a banking company and a non-banking company. Both of them, their main business is to provide finances. They can enter into other types of business also, like insurance, providing finance, giving loans and all that. The major difference between the two is, we have an account with bank, correct? We open a saving account, we open a current account. Now saving and current account, now it is called as demand deposit. Demand, why we call it as demand? If you have your account in the bank, saving account, anytime you want you can take the money. If you have a current account, anytime you can take the money. So NBFC doesn't deal in transactions of demand deposits. So the major difference between the two is, both are financing companies. Main business is to provide finance, gives loans and advances. Both of them enter into insurance businesses also. But one major difference between the two is, non-banking financial companies cannot accept deposits which are demand. You can place a fixed deposit. Today you place the money, invested for 6 months. That is fixed deposit. We call it as time deposits. But demand deposit, that is saving and current account, that facility is not provided by NBFC. Keep this in mind, very important point for objective also. Now as I told you, this is a very short chapter, so I am not wasting much time. I will straight away get into the sums. Now there are different parts. Few sums are similar, small sums, what we did in banking also. But the part what I am doing today, the first part what I am starting, that we are doing it for the first time. Now listen, whether you are a banking company, whether you are a non-banking company, the main governing body of all banks in India, whether banking company or non-banking, is RBI. So without having a registration with RBI or without having a license of RBI, you cannot indulge in any activity, whether you are a banking company or you are a non-banking company. So the first step is, in order to get into the business of NBFC, proper NBFC, if you want to open your company as an NBFC, you need RBI ka license. Now to get RBI ka license, there is a limit. That limit is your net owned funds. Your net owned funds should be at least 2 crores, that is 200 lakhs. Only if your net owned funds is more than 2 crores, then only you get an eligibility of taking RBI ka license. And if you do not have that limit fulfilled, you have to wait for that limit, or you cannot apply for license at all. So what I am doing today, the question sheet is there in front of you. If you see the first page, there are 5 sums. Now today I am taking all the 5 sums. It may take 2 videos. It will definitely take 2 videos. So all those 5 sums I am covering in today's sessions. Now as I told you, the criteria is, the net owned funds should be at least 2 crores, that is 200 lakhs. So what I am going to do today is, we will see how to calculate the net owned funds. We will see how to calculate the net owned funds. Now see, in the textbooks and all, they have given you a shortcut way. That is also fine. But there is one step where students will get confused. So what I have done is, I have made this calculation of net own funds stepwise. 4 steps, they have done the same thing, but they have merged everything into one. I am separating in 4 different steps to make the calculation much easier for you all. They can ask you as a 7 or 8 mark question. These sums, what I am doing today, the starting of 5 sums, they are not at all worth 15 marks. They will come as 7-8 marks only. The first sum is you just have to comment only. The next 4 sums you will have to calculate the net own funds. And the sums are such that every sum has a different variation. Now listen. How do we calculate net own funds? Step by step. First step, you have to calculate own funds. Own fund means the funds which belongs to the owner. You all are doing vertical statements since last 2 years. You all know what is owner's fund. Now here there is an exception. See here. How do I get my own funds? It will be your own share capital. Even private companies can issue shares. So it will be equity share capital. Now listen very carefully. It will include preference share capital, but only convertible. If there is non-convertible share, then that cannot be a part of this. So it will include equity share capital and preference shares only if it is convertible preference shares. If the preference shares are non-convertible, then you cannot take. Plus, you will take free reserves. Only free reserves. You all know very well, you all have done in buyback, you all have done in last year in redemption of preference shares. Free reserves are those which can be used for any purpose, especially declaration of dividend. Examples, profit and loss, general reserve, dividend equalization reserve, reserve fund, all are your free reserves. CRR, revaluation reserve, capital reserve, these are not free reserves. Capital reserve can be a free reserve unless and until the question says that it is realized in cash. Otherwise you cannot take it. So free reserve would include general reserve, P&L, reserve fund, dividend equalization fund. Same what we had done in buyback and other chapters. So see, first what you will do, take the total of equity share capital, convertible preference share capital, free reserve, whatever is there in the sum. Take that total. From that, we know very well, when we calculate the owner's funds, we do not take fictitious asset. So deduct fictitious asset and deferred expenses. You will have done an internal reconstruction. Debit balance of P&L, discount on issue of shares and debentures, underwriting commission, preliminary expenses, all that comes under the heading fictitious and deferred expenses. Now see, one important point. When you calculate the own funds for this particular chapter, you also have to deduct all intangible assets. So if there are any intangible assets, goodwill, patents, copyright, trademarks, all that have to be deducted to arrive the figure of own funds. Okay? So I repeat, step number 1, calculation of own funds. It will be equity share capital, convertible preference share capital, free reserves. From that, deduct fictitious assets, deferred expenses, intangible assets, get your own funds. Clear? So step number 1, get your own funds. Next, step 2, calculation of investment in group and subsidiary companies. Subsidiary company means that company where you are holding more than 50% of the shares. If you have investment of more than 50% of shares in a company, that becomes your sister concern, that is subsidiary company. And group means, say you are, say Adani Group. So Adani Group, all companies which belong to Adani are called as a company of that particular group. You don't have to bother much, they will give you in the question. So if this NBFC, whose limit we are calculating, if they give you the information for any investment of shares, debentures and bonds, any loans and advances, or any amount which is invested in subsidiary and group companies, then that total you have to take. This is just extra presentation. As I told you, Textbooks have made a different presentation. I am avoiding that because I know students will tend to make a mistake. Here your calculation will become much simpler. You will take extra 2-3 minutes to solve, maybe another 4 minutes, but you will not make a mistake. Got it? So step 1, get the own funds. Step 2, take the total of whatever investment is made in the form of shares, bonds, debentures, or any loans and advances or any other amount invested. All this is group and subsidiary company. Take that total. Next, step number 3. Calculate the excess of investment in group and subsidiary companies over 10% of own funds. So see what you will do. Whatever is the total as per step 2, write that total here. Whatever is the total as per step 2, that is your total investment, put it here. Then what you do? From that, whatever is my answer in step 1, own funds, take uska 10%. So deduct less 10% of own funds as per step 1. Difference will give you excess of investment in group and subsidiary companies over 10% of own funds. This is 10% of own funds. So whatever you have invested here, this minus this will give you excess of investment in group and subsidiary companies over 10% of own funds. This is the step where the student make a mistake, so I have made it separately. So I'll repeat. Take investment in group and subsidiary companies total as per step 2. From that, whatever answer you got in step 1, own funds, take uska 10%. That will be your excess of investment in group and subsidiary companies over 10% of own funds. And the last, step number 4, very simple. Calculate your net own funds. That will be your own funds, what you got step number 1. And from that, deduct the excess of investment in group and subsidiary companies over 10% of own funds, what you got in step 3. In short, my net own funds will be step 1 answer minus step 3. Getting it? As I told you, this way it will take 4-5 minutes more to solve, but you will not make a mistake. If they ask you, it will be a 7 or a 8 mark question. These sums, this type, you will not get for 15 marks. Got it? So in this video and the next video, I am just focusing on the sums where we will see how to calculate the net own funds. Got it? Just keep these 4 steps in mind. I have taken the picture and attached in the group also, so you can focus on this. I will be solving on that basis. Now see, if you see the question sheet, first page where there are 5 questions, in which in the first question we just have to give the conclusion, and the remaining 4 we have to calculate the net own funds. Okay, what I told you the limit, 2 crores, that is 200 lakhs. Okay, sure. Let's see. Question number 1. Okay, let's see. XYZ Finance Company has applied for the following details. NOF, that is net own funds, is 150 lakhs. One director is having NBFC background. Okay, it is registered under the Companies Act 30. Now that is important for theory. First of all, you have to be a company. Then only you come under the category of NBFC. So that is clear. You have to get yourself first registered as a company. Then only you can proceed further. Mrs. Shailaja, who has completed her MBA Finance, has joined the company. She is asked to give advice whether the company can get license from RBI for commencing a business as NBFC. Now what I told you the limit is 200 lakhs. Now see, what is the net own funds given there? The net own funds given there is 150 lakhs. So can I say it is less? Now forget about the other factors. We are in the sums. So we just want the monetary data. So the net own funds is less, below the prescribed limit, so she is not eligible for taking any license from the government. Okay, just write the conclusion. Write the conclusion. It is just in the form of conclusion only. Right. The net own funds, if you all want, you all can write it in the question only itself. The net own funds of XYZ finance company, the net own funds of XYZ finance company is 150 lakhs, that is less than 2 crores, you can put in brackets 200 lakhs, less than 2 crores, that is 200 lakhs. Therefore, they are not eligible. Therefore, they are not eligible to get license. They are not eligible to get license from RBI for commencing business as NBFC. For commencing business as NBFC. Okay, this was a short conclusion. Clear? In case they tell us to calculate, so we have to calculate, and if they tell you to comment, then only you will comment. Most of the sum you just have to calculate the net own funds. Clear? So this company you can operate in a normal way, but you cannot operate under the license of RBI. That means you can continue your finance business as a normal finance business, but without having the license or registration of RBI. Clear, guys? Sure. Now let's take the other questions. Question number 2. Now I am solving 2, 3, 4, 5. Let's see. IB Limited is a company registered under the Companies Act 13. As I told you, first is you have to get yourself registered under the Companies Act. The company has decided to commence the business of NBFC. It has supplied the following information. Now the amount is in lakhs. Equity, share capital, convertible preference share, general reserve, deferred expenses, investment in shares of group company, investment in debentures of group company. Omkar has completed his MMS finance and joined the company as finance executive. The CEO of the company has asked Mr. Omkar to advise whether the company is eligible to get RBI license. Now see, previous sum they gave us the amount of net own funds. Now in this sum we will have to calculate. Okay, so I'm not rubbing the headings. I'm just letting the headings be there only, so I can just fill up the data according to the question. Remember, we will follow the same 4 steps what I've discussed with you all, so that your job gets cut down. Okay, I follow the same 4 steps so that your job gets cut down. Okay, chalo. Step number 1, calculation of own funds. And before that, amount is in lakhs, so just write there rupees in lakhs. Entire sum rupees in lakhs. Now see, how do we calculate net own funds? First, equity, share capital we know. So let's take one. Give the heading. Step 1, calculation of own funds mein equity, share capital 250. Next, convertible preference share. Remember, a non-convertible will not come. So, convertible preference share capital, that is 150. What we do next? We add the free reserves. See, there is only one free reserve, that is general reserve. So, general reserve, that is 100. General reserve, that is 100. Anything else there as far as the addition is concerned? No. Take the total. 250 plus 150, 400. 400 plus 100, 500. Now from this, we have to deduct the fictitious and deferred expenses and intangible assets. Now see, they have given you deferred expenses, there is no other expenses, and the last two are investment, that doesn't come in step 1. So from this, deduct deferred expenses less deferred expenses, which is 50 lakhs. So you get 450. So 450 is my own funds. So 450 becomes my own funds. Got it now guys? I'll repeat. Equity share capital, convertible preference share capital, free reserves, and from that deduct the fictitious deferred expenses, intangible assets, if any, also has to be deducted, but in this sum it is not there. So my first step ka answer is own funds 450. Second, step number 2, calculation of investment in group and subsidiary companies. There are two investments, we just have to take the total, but we will show the presentation. We'll write the words given in the question. Investment in shares of group company, that is 100, and the next is investment in debentures of group company, that is 150. So 100 plus 150, my total investment in group and subsidiary companies is 250. Okay, now see, coming to step number 3, calculation of excess of investment in group and subsidiary companies over 10% of own funds. So what I told you, first you see what is your investment amount in group and subsidiary company. Step 2, 250. So write here 250. Next, I will take 10% of own funds, that is step 1 ka. Step 1 ka own funds is 450. I'll do it here. 450 ka 10% gives me 45. So 250 minus 45 gives me 205. Okay? 10% of own funds. Own funds is 450. So 450 ka 10%, 45. So my excess of investment in group and subsidiary companies over 10% of own funds becomes 205. Once I get this, the rest is straightforward. Step 4, calculation of net own funds. Own funds, step 1, that is 450, and excess of investment, step 3, that is 205. So 450 minus 205, therefore my net own funds is 245. Okay, net own funds is 245, and everywhere it is rupees in lakhs. So write rupees in lakhs. Got it guys? So now see, what is the net own funds? 245. Hope the calculation is clear. I'll repeat again. Step 1, get the own funds. Step 2, take the total of investment in group and subsidiary companies. Step 3, from the total of investment in group and subsidiary companies, deduct 10% of own funds. That gives you your excess of investment in group and subsidiary companies over 10% of own funds, that is 205. And your net own funds will be own funds minus excess of investment in group and subsidiary companies over 10% of own funds. 450 minus 205, that is 245 lakhs. Now this is 245 lakhs. What is the limit? 200. Previous sum mein the company was not eligible. Now can I say it is about 2 lakhs? 200 lakhs, sorry. About 2 crores, you call it as 2 crores or you call it as 200 lakhs. It's one and the same thing. So can I say they are eligible? Why? Because the net owned funds is about 200 lakhs. Just write down the conclusion. The net owned funds of, what is the name? IB Limited. The net owned funds of IB Limited is 245 lakhs. Is 245 lakhs, which is above the limit of 200 lakhs, which is above the limit of 200 lakhs. Therefore, IB Limited is eligible. Therefore, IB Limited is eligible for license from RBI. Therefore, IB Limited is eligible for license from RBI. Clear? So first question mein it was just conclusion. Second question mein it was solving plus conclusion. Okay, let's take the third question. I'll see whatever I can manage in the video, I'll do that. So, question number 3. Calculate net owned funds from the following information. Now see here, they have just told you to calculate. No conclusion. Conclusion was there in the first two sums. Here no conclusion. What they say? Paid up capital, free reserves, loans, deposit, leased out asset, investment in shares of group company, debentures of group company, cash, bank, deferred expenses. So let's start same way. Calculation of own funds. Here also the question rate is missing. All the question and rupees in lakhs only. Now see, paid up capital. If there is only one capital, it has to be always equity. Okay, so calculation of own funds mein paid up capital, which is nothing but equity share capital, all amount are in lakhs. How much it is? Equity share capital 400. Then see, can you see any preference share capital convertible? No, not there. So what else? Free reserves, take free reserves, that is 2000. Then see, loans, deposit, lease out happened, not concerned. Cash bank no. Deferred expenses. What are the deferred expenses? 800. So first take the total. Even if you don't take the total and deduct here, it's fine. It is just for presentation. Less deferred expenses, that is 800. So 2400 minus 800 gives you 1600. Okay, so 1600 is my own funds. Rest of the items are not connected with own funds. Now next step, calculation of investment in group and subsidiary companies. See the question. Now see here, left side pe there are loans and deposits. If they say now loans and deposit given to group and subsidiary companies, then you will take it here. See the format. But they have just given you loans and advances, deposits. It is not mentioned that it is given to group and subsidiary companies. If it was given to group and subsidiary companies, then in that case you would have taken it, otherwise no. So we won't take it. So now right side pay, even leased out asset, it is not a part of group and subsidiary companies, but see the two investments, both form a part of that. So investment in shares of group companies 400 lakhs, or you call it as 4 crores, and same investment in debentures of group companies 400. So 400, 400, that is 800. 400, 400, 800. Step number 3. Calculation of excess of investment in group and subsidiary over 10% of own funds. What is my investment in group and subsidiary companies? 800. From that, I will deduct own funds 1600 cut 10%. That is 160. So 800 minus 160. My excess of investment in group and subsidiary companies over 10% of own funds is 640 lakhs. So excess of investment over 10% of own funds is 640. And the last step, own funds, step 1, 1600, excess of investment in group and subsidiary companies over 10% of own funds, 640. So 1600 minus 640, 960 is my net own funds. 960 lakhs is my net own funds. They have just told you to calculate, no conclusion. If conclusion was there, what we would have done? Conclusion would have been positive. Yes, they can opt for RBI license because this is more than 200. But here they have just told us to calculate. Clear, guys? Okay? I'll just take the pic. I'm continuing the video. I'm not pausing it because I think I should be able to manage all the 5 sums in this video. I'll manage it. Okay. I take the next question now, that is question number 4. Let's see. Question number 4. Calculate net own funds from the following information. It is similar only. Paid up equity capital, paid up convertible preference share capital, general reserve, P&L, deferred expenses. Now, only one extra item. There is patents. Now, patent is an intangible asset. This is one new point as compared to the earlier sum. Patent is an intangible asset. Investment in shares of group companies, debentures in group companies, cash and cash. So one new item as compared to the earlier 2 sums, patent is there. Calculation of own funds. First, paid up equity capital, so take. Equity share capital, that is 300. Then convertible preference share capital. We have to always take paid up value only. convertible preference share capital 200. General reserve 400. Then profit and loss is also free reserve, so 200. Deferred expenses, patents, both will be deducted. So first, let's take the total. So 300, 500, 900, 1100 is my total. Now from this, we will deduct the deferred expenses and we will deduct patents. Deferred expenses is 100, patent is 150. Remember, patent is an intangible asset. See the format what I gave you. Step number 1 may to get the own funds, we deduct patents. Okay, so 1100 minus 250, my own funds are 850. My own funds 850. Step 2, investment in shares and group companies. They have given you investment in shares of group companies 100. Debentures, so same item, that is 200. So the total is 100 plus 200, that is 300. Okay, the total is 300. Next, come to step 3, calculation of excess of investment. First, investment in group and subsidiary companies as per step 2. How much? 300. Less 10% of own funds. How much is own funds? 850. So 850 ka 10%, 85. Take the difference. So your excess of investment is 215. Excess of investment 215. And the last step, net own funds, which is own funds 850 minus excess of investment 215. So my net own funds becomes 635. So my net own funds becomes 635. So 850 minus 215 will give you 635. Clear, guys? So the only different point in this sum as compared to the earlier sum was that here patent was there, which was an intangible asset. In the earlier two sums there was only deferred expenses, there was no intangible asset. Here patent was there as intangible asset, so we wrote patent. Clear, guys? Again, no conclusion, so you have to just leave it here. In case there was a conclusion, this is more than 200 lakhs or 2 crores, therefore this company is eligible for RBI license. Clear with it? Okay, guys? Now see, same type, the next is question number 5. When I say same time, matlab same level, but this sum has got few important items. Put this as an important question. Question number 5, put it as an important question. There are many items in this, few of them which we are supposed to ignore. Okay? I'll just pause the video and just be back with the file. Just rub everything and we'll be back. Okay, guys, continuing with the 5th sum. As I told you, this is the last sum of the first variety. So I was able to manage all the 5 sums in this video. Do this properly because this is a very scoring part. This 5th question is a very important sum, mark it very important. It covers all the inclusions and exclusions, majority of the items which are connected with this calculation. Let's see the sum. Calculate net owned fund from the following information. All rupees are in lakhs. Equity share capital, convertible preference share capital, non-convertible preference share capital, revenue reserve, P&L debit balance. Remember, only P&L is free reserve, but P&L debit balance means accumulated losses. That will be a fictitious asset. Revaluation reserve, capital reserve, brackets may given not realized in cash. We will come to that. Deferred expenses, goodwill, investment in shares of group companies, debentures of group companies, cash and bank balance. Okay, let's start. Step 1, calculation of own funds. First we have equity share capital 600. Equity share capital 600. Then convertible preference share capital 400. So take convertible preference share capital 400. Now see the next one. Non-convertible preference share capital. What I told you, only convertible comes, non-convertible doesn't come. Put across, non-convertible preference share capital will not come. Revenue reserves. Revenue means reserves created from day-to-day activities. Revenue reserve is a part of free reserve. So take revenue reserves, that is 700. P&L debit balance. As I mentioned, P&L debit balance is accumulated losses. If they give you only P&L, it will be added. P&L debit means fictitious asset, it will be deducted. So keep it on hold. Revaluation reserve. Revaluation reserve is not a free reserve. Put across. Revaluation reserve is not a free reserve. Capital reserve. Now see what is given in brackets, not realized in cash. That means it is again not a free reserve. Capital reserve will be considered as free reserve. Understand this. We have discussed earlier also in the other chapters. Capital reserve will be a free reserve only if the amount is realized in cash. Capital reserve will be a free reserve only if the amount is realized in cash. So capital reserve also will not come. Deferred expenses will be deducted. Goodwill, intangible asset, deducted. Next two will be a part of second step and cash and bank be ignored. Okay? So only three additions. Take the total. 1000 plus 700. 1700. From this, now remember we have to deduct three things. Less, one by one. P&L debit balance. Again I am repeating, if it was only P&L or profit and loss credit balance, it would have been a part of free reserve. P&L debit balance, that is 150. Next, revaluation and capital reserve, not free reserve. Deferred expenses, deduct. Less deferred expenses, that is 50. And intangible goodwill, that is 120. Okay, so debit balance of P&L, that is 150. Deferred expenses 50, goodwill 120. Remember, intangible assets have to be deducted. So 1700 minus 150 minus 50 minus 120. 1380 becomes my own funds. So my own funds are 1380. Second step, calculation of investment in group and subsidiary companies. Straight away given. Investment in shares of group companies 120. Debentures is 180. So 120 plus 180, that is 300. 120 plus 180, 300. Step 3. Excess of investment in group and subsidiary companies. Investment in group and subsidiary companies 300 less 10% of own funds you have to deduct. My own funds is 1380. So 1380 ka 10%, 138, that gives you 162. So my excess of investment in group and subsidiary companies over 10% of own funds is 162. Last step, net own funds, that is own funds 1380 minus 162. So 1380 minus 162 gives you 1218. Therefore, my net own funds is 1,218 lakhs. No conclusion. If conclusion was there, yes, because this is more than 200, they are eligible for RBI license. Okay, so this was a very important sum. What was excluded? Non-convertible preference share capital doesn't come. Revaluation reserve is not a free reserve. Capital reserve will be a free reserve only if realized in cash. They will mention. If they don't mention, you don't have to take. Even if they tell you only capital reserve, you will not take it. And goodwill, intangible assets, deferred expenses, P&L debit is fictitious, deduct all three. So what was excluded? Non-convertible preference share capital, revaluation reserve, and capital reserve. This was the first part of this chapter, a very, very important part, and you all have seen it, very scoring part also. That's it. I discussed the concept of NBFC, we discussed what is net own funds, and we did 5 sums. First was only conclusion, the remaining 4 was calculation. That's it guys, see you all in the next class where we will continue. The next couple of sums of the next lecture are similar to what we have done in banking companies. You will find it very simple. That's it guys, see you all in the next class with continuation of NBFC. As I told you, it's a very small chapter. Another 3 to 4 videos this chapter will get over. That's it guys, see you all in the next class.